Tuesday morning and coming in, and I'm looking at the markets, and I'm looking for the biggest news story of the week. Is it the stock market? All right, S&P 500 nipped all-time highs last week. I've got a target of 625. That's not the news story of the week. Is it the bond market? Well, TLT, the bonds, poked above 89 last week. That's a bullish sign too. If it's going to get above, and it did close above that downtrend. That was on Thursday. So what happens here is if we go higher, interest rates possibly come down a little bit. Is that the story of the week? No, it's not. Here's Bitcoin. Bitcoin is wow, a lot of coins, and you can see them behind me here on my screen. I've got this is a 24-hour bubble of Bitcoin down 1.3%. What is that? Ethereum down 5.4%. But you take a look at these, and these are from the levels they were trading at 24 hours ago, and then there's some double-digit names on there too. What's interesting is Bitcoin is really consolidated. If you look at the last couple of weeks, we've been hanging out here in that mid-90s area. So there's a little green splash across my screen there that's between 102 to around 108. This is what I call the liquidation zone. The liquidation zone is where if we go up to that area and we get in that range, you're going to start seeing short traders that are short this start to get liquidated. And obviously the biggest area of liquidation is at and above 108. We get in that liquidation zone and we haven't been there. We've not been there. We touched it in February once, but we haven't been there in quite some time. I believe we're going to get to and get above those new all-time highs. So even that is not the biggest news story coming in today. The biggest news story is the price of eggs. They are literally triple what they were in October. Now, I had to go back and find this because I don't have this chart. All right, I don't have this chart on Hub. I don't have this chart on Tom's Option Tools because we don't chart the price of eggs. I don't trade eggs. Right? I'm hearing stories of people that are stealing eggs now, truckloads of eggs, because the price has gone up so high. I mean, the price that they were in October was around just above $2 a dozen, and this was coming into mid-January when Trump took office, and then we were up at $7.74. What's interesting is this. So price of eggs. If you buy the mass-produced ones, and those are the ones where they're in the white cartons. You can get them in dozens. You can get them in flats. All right, yeah, those were the ones that were priced low that move higher, and we were talking about like $3, $4, $5 a dozen, right? But if you wanted the cage-free eggs, if you wanted the Nellies or Happy Eggs, and I know these because these are the ones that end up in my refrigerator. These are the ones that my wife buys. They have not gone up that much. I mean, those are already still $9, $10, $11 a dozen, and they've gone up maybe $1 or so. What's interesting is that as you look at the shelves were bare last week for eggs because this became this big news story. Here we are. We're in the middle of February. It's a news story. Eggs were this high in January. It just became the centerpiece story. So we started looking at over the weekend, as everyone else is hanging out for the 3-day weekend, we were looking at the price of eggs and who it stands to benefit. So I want to talk about the 3 biggest news stories that are impacting eggs and the 3 stocks we're looking at that I think will benefit from this. So the top 3 factors that are impacting egg prices right now: the influenza, the bird flu, all right, 20% rise in 2025 just due to these outbreaks. And the number is an absolutely absurd number of the number of chickens and hens that are likely affected by this. There's also a supply issue, the shortages of truck drivers. Getting it from A to B, that's also an impact. And number 3, and this is one I didn't know, is that several states are implementing laws that are requiring cage-free or free-range egg production. For instance, Colorado, by January 2025, all their eggs have to be cage-free and that's influenced a lot of the egg prices as well. Now let's talk about three stocks. Number one, Cal-Maine, symbol CALM. If you take a look at this one, this is a chart that goes back into about mid-September, and you got a nice trend line there that goes from 70 all the way to 115. And then look what happened here. So this is during the area of January. Look what happened. This wasn't moving higher since January. A nice uplift. There's an area of support that we see right down here around 86. But we have, since that area, and it's touched that 115 area a few times, dropped down from 115 to 95 very, very quickly. So Cal-Maine, as the price of eggs have gone higher, and it's been noted now, across several news sources, this has impacted Cal-Maine negatively, about an 18% drop just in the last couple of days. We've dropped down into an area where we broke the support line that was around 98. We got a little support where we are right now, but the big support level is 86 on CALM. Here's Post, not the cereal. All right, talk about that in a moment. Hard drop after initial reports. You can see the initial reports that happened in mid-December, 125 down to around 105. Again, here's another about 18% drop. And then, of course, now this one's bumped up, is now trading around $111 and change, and that happened over the last week. And number three is Archer Daniels Midland. All right, ADM, the grain provider to not just humans, but chickens and hens. That trend line has been looking sick since the middle of last year. $65 on the high in August, down to $45 here just last week. There's some price consolidation down here around the level of 45. So let's put them all together. All right. Again, which stock looks like a buy? Tell me what you think. Put it in the comments below. Cal-Maine. So Cal-Maine, 20% of the eggs in the U.S. come from this particular company. So you can see with egg prices moving up, this is a big one that's going to be affected. Post, and again, I said not the cereal. This company actually produces, among other things, the egg whites that come in cartons. And this is going to also have a high effect due to the egg supply and, of course, the lack thereof. Archer Daniels Midland, well, they supply the grain for chicken and hens. And then with the drop in numbers, and I'm talking about not the number of humans, the numbers of chickens and hens, and potentially the drop in the future, this is going to affect its stock price because it is going to be demand that's going to be affected, not so much supply. Their supply remains the same, but demand could possibly, if not already, drop off. Now, of these three companies, Cal-Maine, Post, and ADM, one of these stands out as a rules-based trade coming into today. And I'm not going to sit here and teeter-totter. I'm going to go ahead and give you that name right now. That name is Archer Daniels Midland, because of these three companies, our money calendar now has a buy on ADM, even though the chart looked sick, all right, downtrend. It's consolidated, and between now and about April 21st, this stock likely moves higher. The only time in the last 10 years that it moved lower during this time frame was during COVID. If you remember 2020, everything dropped in that time frame of March, give or take. And so that affected ADM among most other companies. But you take out that weird part of 2020, and you can see this has actually moved up quite a bit last year during this time, almost 15%. We're looking at the regression line across all 10 years, about a 9% jump in price between now and April 21st. That puts ADM back around the $50 price target by April 21st. So, in summary, what do we do with this information? If you like rules-based trading like I do, and you take a look at this and you do the research yourself, maybe you like ADM, you could simply buy the stock, all right? Again, like I said, no guarantee, but historically, 9% on the regression, could simply buy the stock, 9% return. You could look at call options. They could make sense on this as well. If you're looking at call options on any kind of a pattern like the money counter pattern, we look at the end date of the money counter pattern, and that's where we determine what expiration to use. And the last thing I would look at is volatility. What is the volatility of the options for this underlying? Are they cheap, or are they expensive, or are they right in the middle? Because depending on what that volatility is going to tell me whether or not I want to be a buyer of time premium or a seller.